Ho, Coaching Success Radio. Today's show is completely different than what we usually do. We're going to talk about money and what you need to do as you start earning more and more from your business. As I build my coaching business, I want to know how to effectively serve clients and make more money doing it. This podcast will pull back the curtain to reveal exactly how successful coaches are building their empires. Join me as I engage with top coaches from all over the world to discover their secrets. No theatrics and no theory, just real life strategy. My name is William Winterton, and this is Coaching Success Radio. All right, so I am a money guy. I love talking about money. I'm actually kind of weird in that sense. Like, it doesn't freak me out. I actually get excited about it. It's something that I've always been curious about. I've always been very passionate about it. And what happened to me is I had my money mindset completely altered about 10 or 12 years ago when I first started reading Napoleon Hill, Rich Dad, Poor Dad by Kiyosaki, all the stuff with Dale Carnegie. Just kind of all these things started like blowing up in my mind, and everything I used to think about money completely got flipped upside down. Tony Robbins has a great book as well on money. I mean, there's so many resources out there, and if you take them to heart and you start applying all the principles you start learning about money and investing, you start looking at it very differently than whenever you're living a life that you're scared of it or don't talk about it. And we're very open with our kids. We talk about money all the time. We talk about it's not that we can't afford it. It's just that right now it's not what we need, and how can we figure out how to afford whatever it is that they want. If they want a new game for their video game system, if my daughter wants something new to wear, okay, figure out how you're going to make that money and how you're going to get that money. And it's a much different process than going, yeah, here's some money, here's some allowance or whatever. Figure out how you can actually make this money that you want to be able to spend. How are you going to actually manifest this, right? So I'm very fascinated by the concept. I can just get on and on about the talking about it. In the coaching world, my goal is to help you as a coach grow your business so you start making 5 figures a month in coaching, because I think that the more money you have, the more power you have, the more ability you have to give. I have no problem talking about capitalism, talking about the things that are important in terms of earning a lot so you can give back a lot, right? If you don't have any money coming in, you can't give, right? That's all there is to it. So the more money you make, the more power you can actually make as a positive influence in the world. So what do when you start earning a lot of money in your business? How do you put things together properly so you keep the money and actually grow your nest egg? So I had Brian Wynn on a few weeks ago to talk about taxes, tax advice, setting up your LLC or a C Corp or S Corp, whatever you need to do. So I'm trying to kind of get this mindset for you as well, that it's not just as important to have you learn how to be a better coach and marketing strategies and that kind of stuff. You actually need to know how to be a good steward of the money that's coming in, so that you can actually grow your coaching business, so you can actually develop your lifestyle that you wanted, so you can actually feed your community the way you want to be able to give, and it really makes a huge difference whenever you go into the business with this mindset of looking to try and make as much money as you can to serve as many more people as you can. So today I brought on Nicholas Jensen. Nicholas he's a money mind, just like me. He's huge into real estate, huge into investing, and I met him online, had a lot of conversations with him, and this discussion here is all about money, how to use the money that you're making in your coaching business and start reinvesting it either in your business, reinvesting it in safe assets that you can use to grow, and to kind of give you a basic 101 understanding of how to invest that makes you feel like you're actually in control of your money instead of just letting somebody else handle it. So anyway, it's a very interesting conversation. I think this is still incredibly valuable to you. That's why I want to bring this. It's on Coaching Success Radio. I get it's not specifically coaching related. It's any small business. But I truly believe that if you're going to be an entrepreneur that's going to make a huge impact, you've got to be smart and responsible with your finances and do the things required of you to help your money to grow. So here we are. This is Nicholas Jensen. Hey, what's going on? William here with Coaching Success Radio, and today I am super excited. I've got Nicholas Jensen. Now, here's the thing. Nick is not a typical person I would bring on the show. He's not a coach. He's not in this coaching world. He doesn't do, in the sense of traditional coaching, life coaching, health coaching, business coaching. But what he is he's a financial mind who is really concerned and passionate about helping you to keep your finances where they are and grow and build them instead of putting them into some kind of a risky investment and having them drop out, not knowing what you're doing. He's got some really smart strategies and some great insight, and I thought bringing him on would be super valuable for the listeners. And I think he's going to share some really incredible stuff to take away. So, Nicholas, how are you, man?
Dude, I'm doing great, William. Thanks for having me on.
Dude, it's phenomenal. So, just in this short time, I cannot start this podcast without at least mentioning the fact that You had a really awesome occupation about 15, 20 years ago. Tell me just a little bit about what you did.
Yeah, so I grew up on a farm in Idaho, so that naturally leads into farm boy type stuff. So I rodeoed, through high school and college and professionally for a little while. So yeah, I rode bulls and absolutely loved it.
That is awesome. That is so not something I've ever done in my life. That is like, I am not wired for that.
I recommend it.
That is awesome. I get fascinated, and I'm not just blowing smoke. I'm actually really fascinated at how, and that it's a huge deal. Like, it is a big deal for the people who are like in it. It is a major thing.
Oh yeah. Yeah, it's a lifestyle. You're all in or you're all out. So yeah. It's a lifestyle for sure.
Yeah. I'm in Tucson, Arizona, and we have so rodeos are huge here. Like we have a huge rodeo parade every year. And I've just never been. My family and I, we live on the other side of town. I know people who are just like, that's their life. They live, eat, and breathe this stuff, man. And so it's like, God, it's phenomenal. So let's split off a little bit here. Tell me a little bit about going from that. Now tell me what you're doing exactly as far as your financial transition, because that's a heck of a transition going from writing bulls to I guess bull markets, bear markets. Tell me a little bit about what you're doing.
Yeah. So basically, what I do is I help business owners basically build wealth outside of Wall Street. So one of the situations, or when you look at business owners and you look at the statistics of success, as well as the successful exits, there's just some basic things that business owners can be doing to help them set themselves up financially. And a lot of them aren't doing it because frankly, we're getting bad advice over media, billboards, radio, financial celebrities, if you will. And so I really just help business owners set up the structure and the strategy that they need to set themselves up successfully financially. So yeah, that's what I do now.
So if you're brand new, let's say you're into coaching, you've started building your business and you've started making some money on this, what you're talking about is as you start getting money come in, clearly what I teach my clients is the first thing you got to do is take that money, you're going to reinvest it into your business, right? You're going to start offsetting stuff that, like, if you can pay somebody to do work, we were just talking earlier about podcasting, or if there's some kind of media or marketing that you can reinvest and take something away from your plate so you're not having to do everything yourself. I like to get that kind of farmed out. But once you start having that taken care of and you're still earning beyond that, you have money coming in. Once you start getting, relatively significant amount of money to come in, you've got to know what to do. You got to be smart with it. And I think a lot of people just look at that and go like, okay, well, I'll just put it into stocks, or I'll throw it into a 401k. But that's not necessarily a smart play if you're just going to throw everything in there. Why not?
So here's a couple things. So let's back up a little bit. When you start to make money, as you talked about, right, and you've got that money, what I tell clients to do is you really just need to start dividing every dollar that comes in. So every dollar that comes in, you need to have, I look at it as little soldiers, if you will, little army guys. And I'm their commander, and I got to tell them exactly what to do, or they're just going to run rogue. They're going to do whatever they want, right? So what happens is most business owners, they don't pay attention to those types of things. And so as you talk about, you keep reinvesting in your business and you keep reinvesting, but at some point, like you're bringing in a lot of income, you're putting a lot out there, but you're not getting any traction financially. So as that money comes in, you need to split it off. Very first thing, basic principles, right? Pay yourself first. So you need that. What I tell people is create separate accounts. So the first account is an income account. So all of your money goes into that account. And then you have a different account for your expenses and a different account for your profit. So as that money comes in as income, break it off and say, okay, out of every dollar that comes in, I'm going to take 10% profit and I'm going to pay myself, 20%, 30%, whatever the case may be. What is left over is what your expenses should be run off of. Your business expenses should be run off what it's left over. So let's just keep the numbers simple, right? Every business is a little bit different, but let's keep the numbers simple. Let's just say all of your expenses are going to be run off 50% of your business, right? So as you split that money up, every month that if you're splitting that money correctly and you're spending more than 50% of what you're bringing in, you're not running a profitable business, right? You can only do that for so long before you basically go under. So the point is as that money comes in and you split it off and you pull all of your expenses out of that expense account, if you will, very easily if you're profitable. right? And then you can start to make adjustments of, okay, what can I be more efficient with in my finances, right? So as you're offloading some of these things so that your coaching business can grow, you can start to be more efficient with those dollars and say, well, maybe I can figure out a way to become more efficient to where I'm not spending 50% of those expenses, but I'm spending 45 or 40 or 30 or whatever the case may be. And then that gives you a cushion to be investing more back into your business, right? But the whole point is the only reason to start a business is to make money. Let's be honest. Like, we can have businesses from the heart and we want to serve people. And I get that. And I think that we're all there to a certain degree, some people more than others. But at the end of the day, if you're not making money, it's a hobby. That's simply what it is. So you need to make sure that you take care of you and your family first. And the way that you do that is you make sure that the income that's coming in very first is you're getting paid. You're getting paid a profit, and you're getting paid an income or a salary from basically owner's compensation, if you will, right? Once that's in place, then you can start to look at these other investments outside of your business. Because the whole idea is, at some point, you're not going to want to work anymore. Some people are like, hey, I want to be out in 5 years, 10 years. Some people are like, I'm retiring at 65 no matter what. And some people are like, I'm going to work forever. Whatever the scenario is fine for you. But sometimes you're forced to exit early, right? And if you haven't planned properly financially, that's a tough thing to do, right? You're not going to be able to exit, or when you exit, your lifestyle is going to go down. So the whole idea is to say, okay, take that money that you've actually earned as profit, invest that in things outside of your business, and get that money to start to create passive income for you, so that at some point that passive income meets and begins to exceed your income from your business. Then you've got options, right? It's a matter of keeping as many choices open as possible. But if you don't do that, the only choice you have is to continue to work or to find another job. And so that's where people get into trouble. And some people, depending on the business that they're trying to build, and I know individuals that have huge coaching businesses that are profitable that can be sold, right? But if you don't set yourself up financially on the front end, to sell that business is tough to do.
So the challenge is, whenever you're as an entrepreneur and you're doing this on your own and you're not working for another company, it's up to you really to figure out all these systems, right? I mean, if you're in the E quadrant, let's go Robert Kiyosaki for a second, and you got this person who's just working for a company, and you've got all these, they're paying into this and they're paying into that, and you're getting all these benefits and stuff. That's one of the safety nets that you have working for an organization. But when you have your own business and you're running it, I think a lot of people get so hooked on this idea of like, I'm going to start making money. And then when they actually start having cash come in, they get so excited, like, oh, I got cash coming in. But if you're like, exactly like you said, if you're in this and you want to at some point get out, there has to be something in place that you have to put into place yourself. It's not going to be just laying there. The cash that you've made the last 5 years in your coaching business, if you've even stuffed it away in a mattress, it's got to do something for you. So what are some of give me some steps if somebody starts to make the kind of money they think they should be making, or like you said, dividing it up into buckets at first. But let's just say they start getting to where they're comfortable. They got that 50% range. They're not going above that every time they're going into their business expenses. What's kind of the first steps to make sure they can start building that safety net for themselves?
Yeah, good question. So one of the things that I love is whole life insurance.
What's the difference between a whole and term in terms of investment?
Yeah, so think of it as buying versus renting, right? Term insurance is for a specific period of time. It's a lot less expensive. There's very little benefit. The only benefit is if you die. If you die, your beneficiaries have the death benefit. Whole life insurance, you're actually purchasing a permanent product. It's got a bad stigma for good reasons in the industry. A lot of whole life insurance that's built out there is not built well for the consumer. But if you build it properly, so a high cash value policy, it's got some benefits that are basically a high powered savings vehicle, right? That allows you to then leverage that money to invest in other things. So that would be the next step, is to create your own banking system, if you will. You don't have to use whole life insurance to do that. You could use just a savings account, but there's some extreme benefits. If you can get past the stigma of it, there's huge benefits around saving inside of a policy. So that would be the next step, is start to create your own banking system so that you can start to leverage your own money to invest in yourself, in your business, and then in other cash flowing assets, right? So when you look at other cash flowing assets, the one that I love is real estate. So this brings up a good point. You want to stack your assets appropriately. Most people are like, hey, I'll just go into the stock market. When I first got into this industry, I was a huge stock market guy. Going from bull riding to the stock market, kind of the same adrenaline rush. It was awesome. But in the end, like I found that what Wall Street is selling versus what's actually the consumers are actually receiving, there's a huge discrepancy. Now, is there a place for some Wall Street assets? Yeah, that can be argued for sure, right? Is there potential for gains? Yes. But at the end of the day, you don't have any control over anything that happens in Wall Street. If you buy something in the market, let's say you buy Apple stock, there is nothing that you can do that will affect the outcome of that investment. You have to hope the economy stays strong and Tim Cook doesn't do anything stupid, or your investment isn't going to go well, right? So what I tell people to do is focus on cash flowing assets that, one, you can control, and then two, as you start to give up control, you can be as close to as possible. So the first one is your business. You're never going to get a higher ROI than your business. You know it, you're in it, you understand it. That's just where you're going to get the highest ROI. Then after that, you're going to look at cash flowing real estate. So hard assets you own, not necessarily that you manage, because people are like, oh, I don't want, toilets and tenants and things like that. I get that. I own a property management company. We deal with that with investors all the time. So, but something that's in your name and that you actually own. So you can make decisions that can help affect the outcome of that investment. And then, you use that cash flow to continue to build this nest egg, right? To continue to build this investment portfolio. Then above that, you probably look at some alternative assets. So other type of cash flowing assets outside of Wall Street. And this is where kind of the sky's the limit, right? You can look at private lending. You can look at oil and gas. You can look at syndications. You can look at some crowdfunding. There's so many different realms inside the alt asset space that you can look at to create a return. And then above and beyond that, if there's money left over, and if you want to take on that risk, you can start to look at some market-based assets for some potential returns. So that's the overall structure, right? Cash flow, fix your cash flow, make sure that your business is cash flowing appropriately. Create your own banking system, whether you use a life insurance product or just a regular savings account. It can be done with the savings account. There are advantages using whole life insurance. Very specific whole life insurance, and we can go into details about that if you want to, or at a later time. And then stacking your investments appropriately. And once you do that, and you get that overall strategy in place, and then it's just a matter of, just like a business, it's one step after another to build your business, right? Once you've got the strategy in place, it's just one step after another. You just take the next step and the next step, and this strategy and it really just starts to build and does some phenomenal things for you. So being a business owner is kind of up to you, right? You talked about the employee. They've got all these benefits. The problem with that on the employee side is a lot of those benefits aren't actually benefits. They're actually a detriment to employees. So count yourself lucky that you are your own business and that you have to take control of this, because you're going to have a lot better outcome if you do it right.
So it goes to the point of the stock market, and I'm pretty well knowledgeable in this stuff as well. And I would just vouch that the market it's what they call a zero-sum game. There's you don't get anything. Like you really can't make the money off of it unless you have like ridiculous systems and you want to put all your time and effort into it and go way deeper. But people who just dump their money in the market thinking that that's the way to go, that mindset has shifted a lot in recent years. I know back, especially when my parents were, raising me, it was like, that was it. You put your money in the stock market, and you just hope and pray to win up. And I think the big thing, like you said, as an entrepreneur, we're kind of we're control freaks, right? I mean, like we want to run our business our way. So why would we want to put our money into something that we had no control over? right? Like you said, you can write a letter to Tim Cook, like, please don't screw this up, have a good day, and then like be done. That's like all you can really do, right? So
and he's not going to read your letter.
He's probably not. Yeah, I know. And none of these guys, man, I've written to all of them. Just don't screw up my money. And they don't respond. It sucks. But I would tell you that it's the same way, though. You can get a lot further if you control it yourself, but you do have to be smart. There's a lot of risk involved if you just think, oh, I'm going to go out and buy a rental property and just start taking it on, and you don't know what you're doing. So I want to be real clear that we're trying to help you mitigate that risk, that you're not going to like go into that safe quote unquote 401k, but there is risk. So I don't know if you want to speak to that at all.
So you bring up a good point. The whole idea is when you're looking at investing, there's always going to be some type of risk, right? But the idea is to take on the least amount of risk as possible and maintain the most amount of control as possible, right? So the way that you do that outside of the market, if you will, in fact, just speaking to the market, statistically, and this just happened in the last report was 2018, people are only getting about 5.5% return from the markets, right? So most of the time when you talk to anybody on the street and you say, hey, what's the return you're going to get from the market? They're going to say between 10 and 12%. Well, reality is it's 5.5%. Right. So
why is that? What things go into effect for that?
There's a lot of factors. A lot of it has to do with average versus actual returns. Some of it has to do with investor behavior, fees.
Yeah.
Like the list goes on and on.
Right.
So that's, when you look at a market-based approach, those are some of the disadvantages. Now, is there risk on the other side? Yeah, there's absolutely risk on the other side. And that's where you have to start to build relationships, right? I'm not saying, hey, go buy the next rental property that you see. Don't do that. Like, you need to get in contact with somebody that understands that market, understands the specific market you're looking to get into. And you're going to have to educate yourself. That's just the reality of the situation. Just like your business, you network, you make contacts, and you get business that way. Investing is the same way. You network, you make contacts, and you start to invest that way. So
I don't want to take a whole lot more of your time. This is super, super valuable. But I want to touch back on something you said a little bit ago when you're talking about return on investment, ROI. So you mentioned that as you're going in, you're getting return on investment. You're not going to find any better ROI than you're going to find on your own business is kind of what you're going at. Can you dive into that and what you mean by that?
Well, so think about being an entrepreneur. You're a control freak, right?
Right.
So I have an investment advisory firm, right? I get paid by helping people invest, but I tell my clients right off the bat, I cannot beat the return you're going to get on your company, on your business. Because oftentimes you're going to be, in the 20, 30, sometimes 50% range, because you understand, in the service-based business, maybe you can go to a training that helps clients that allows you to get more clients, right? Maybe you're able to take a training on marketing, because here's the thing in business, right? To just be quite frank, you're a marketer first, because if you don't understand marketing, you don't have a business. You're a marketer first, and second, you're a service provider, right? So let's say that you're able to take some of the money or the profit from your business and invest in some marketing education, right? And that allows you to expand your business and get more clients. As an investment advisor, I cannot beat that return, because that return is going to be not infinite, but it's going to be high, right? Let's say you spend $10,000 to learn that, but you over the next 2 or 3 years, you make $200,000, $300,000, $400,000, $500,000 from it. I can't beat that. Like no investment advisor is going to be able to beat that. Anybody that tells you they are, they're lying to you, right? So that's where you have now. That's where you have to understand that you are your most valuable asset. But does that mean you put all of your eggs in that basket? No, you want to diversify. You want things outside of your business. But at the end of the day, if you understand your business and you understand different conferences or trainings or different ways to help clients better, to improve your services or raise your pricing, that can't be, no investment advisor can beat that.
That's a huge mindset shift for a lot of people, is because if you go in and you go to a training or you hire a coach or somebody to help you that's that's not an expense. That's an investment. There's a difference in that. An expense would be like, I bought a new, software to run, or I bought a new computer, right? That's expensive stuff. But if you're going to invest in your business, if you're going to invest in training, in coaching, in really in, like you said, investing in yourself, that ROI is huge. And I love that you pointed that out, because it really is. It's super, super important to grow in yourself. At the same time, though, you don't want to just say, oh, I made $100,000 this year, I'm going to go spend $100,000 on coaching and learning and training. Yeah. There does have to be a little bit of, a lot actually of accountability and I guess reality that, you've got to be smart when you're breaking stuff up.
Yeah. I mean, you want to make sure that you're doing it. Business is one step after the other, right? So it's not, I made, $100,000 this year, so I'm going to go spend $100,000 next year in education. No, you don't want to do that, but you definitely want to carve off a portion of that. Say, hey, I'm going to reinvest in myself and my business to help grow that, to grow that over time. I mean, I'm a huge believer in masterminds. I'm a huge believer in coaching. I've spent over probably $130,000 in probably 5 or 6 year period of time on consultants, masterminds, coaches, to help improve my business, right? And it's super valuable. It's a return on investment. And the reason I spent that type of money is because I know that's where I'm going to get the highest return. The only time that's not going to work is when I walk outside and get hit by a bus. And then my wife's okay because of life insurance.
I said the life insurance kicks in. So
yeah, the life insurance kicks in, and my wife, she's awesome. She's golden. So.
That's awesome. Well, I'll tell you what. If there's somebody out there who's actually doing really well and is just would like to ask some questions or love to just connect with you, what would you suggest, like, to get a hold of you and to start building that relationship? What's the best way to reach out to you?
Yeah, so you can reach out to me a couple ways. I'm on Facebook. I mean, I'm on all social media, but Facebook is probably where I spend most of my time. So feel free to connect with me there. Send me a DM. You can send me an email, nicholas@nicholascjensen.com. I'm happy to connect and answer questions there as well. So yeah, for sure.
Guys, Nick knows what he's talking about, and I've been checking him out on his sites, on his Facebook, and just in the conversations. And he's legit. He knows what he's doing, and I think spending a little bit of time just asking questions and getting some help from him would be a huge, major investment in your own business. So, Nick, I want to thank you for coming on to the program today.
Thanks, William. It was great to talk to you. Anytime, man.
Wow, that was awesome. Thank you so much for tuning in and checking us out. New episodes are coming out every few days, including lots of conversations with massively successful coaches sharing their secrets with you. So be sure to subscribe to our podcast and YouTube channel so that you don't miss out. And if you're looking for a way to start making serious money from your coaching, you need to check out my free training. It's at williamwinterton.com. I lay out the step-by-step on how to start making 5 figures a month in the next 60 days. Check it out, williamwinterton.com. I'll see you next time.